Dhiraj Agarwal is with us, Managing Director, Ambit Investment Managers. Dhiraj, good to have you with us here. Good morning. So, there are a lot of these events lined up, right? The US jobs, earnings, there's elections, FOMC. So let's paper over all of these. 10 days out, say 15 days out. Will the market be higher or lower?
I think from here, 15 days out is likely to be higher because we have already taken a bit of a knock this month. So it's a difficult call at this point of time whether this correction is one of those 5-6% small pauses and the market resumes immediately after that. Or do we see a more prolonged consolidation in the market? And largely not because of US elections or FOMC or US earnings, but simply because our earnings have been very soft this quarter. And as you rightly said, I heard you before I joined in that a lot of auto companies are saying, just don't go by 15 days and 20 days numbers, wait for some time. The jury is still out whether the current softness is likely to persist for some more time, or was it sort of one-off and then things would resume. So, but given the fact that we've already collected 6.5% this month, FIs have sold 1.1 lakh crores, about $14-15 billion. Quite likely that we bounce up a little from here rather than continue to fall in one straight line.
Dhiraj, hi, good morning. Great to have you in. Happy Diwali and festive greetings to you, your team and your family. The other interesting sort of debate, we were just discussing this, right, is what some of these very sort of well-bid MNC capital goods / power equipment makers, I mean, what they're delivering, because the markets had very high expectations, whether it's a Siemens or an ABB or a Hitachi right now. And today's reaction was quite interesting for me because the numbers seemed okay. Second quarter numbers, margins are up. I mean, revenues up, I think, 25% or so. But the question is there more left on the table to play for? What are your thoughts? Do you like this space to begin with in the first, in the first place? And if yes, and what about valuations and earnings?
I like the space, but I don't like the valuation. So you answered both my questions in the question itself. So one big change which has happened in this quarter's numbers and the stock price reactions to numbers is it's a very clear message by the market that we are moving away from narratives and focusing on numbers. Till last quarter, it didn't really matter that much, so long as you were in one of those fancied categories which was expected to keep growing for the next 4 or 5 years. A slight miss in the numbers did not matter so much. Markets were still sort of 1 or 2 days of 1-3% dip, and then the rally would resume. At this point of time, the market's sending a message that if the valuations are high, numbers will have to justify those valuations. Otherwise, the stock will come down, correct, consolidate, or whatever. So I just call it a shift from narratives to numbers, which will obviously make the markets a lot tougher going forward. It won't be as easy a walk as we have seen in the last 2 or 3 years.
Mm-hmm. All right. Hi, Dhiraj. Just taking a check on a couple of these names. Senco, yesterday there was some murmurs. The management came out there and clarified that there's no problem with regard to any kind of raid or anything on that front. The stock has recovered all of its losses yesterday. At one point of time, it was down close to around 12%. Dhiraj, the gold has been going from strength to strength. In fact, everyone's talking about the equity markets. Gold has given you 25% returns in the last 12 months or so, which is phenomenal. How do you play that theme? Some of these financiers, gold financiers, it appeared that they were the way. But you have one in there. Manappuram has its own shares of problems, so that's not made you any money, though valuations are attractive. And the other way of playing it would be via Kalyan Jewellers, Senco, Titan. So your take.
I mean, why go for the secondaries? If you like gold, buy gold. It's a simple order.
So you'll play gold by itself. Either you rather not play by gold.
Yeah, you can do gold ETFs. You can remit money offshore and buy gold miners, or you can buy gold miners through the gold miners. So if you like gold, buy gold. That's a simple thing, because rising gold prices on jewelry demand sometimes is a positive impact, sometimes is a negative impact. If the prices become too high, the actual jewelry demand starts to come off as well. So it's an imperfect play. It's pretty simple. If you like gold, buy gold.
So, Dhiraj, so I guess you're not shying away from buying gold even after a 30% jump. That's saying something, right? So let's put it all together because there's too much going on from the US result season to figuring out if the Fed will be as aggressive as we thought in September when it comes to future rate cuts, to thinking what RBI will do next. All things put together, my question is very, very simple. If this market is to reclaim its all-time highs and continue its northward march, does it have the ammo? Or are we actually looking at very listless, range-bound markets for a while, which we haven't seen in some time?
I think there is a very high probability that we are looking at a more prolonged consolidation. So, as you rightly said, the earnings ammo is missing to some extent. Rate cuts are not likely to be as aggressive as what one possibly thought a while ago. And at the margin, the global economy is slowing down. At the margin, looks like Indian economy is also perhaps slowing down a little bit. So the September GST collection numbers were high single digits. It's not the usual double-digit print that we have been used to see. There were probably a few one-offs in September, so let's see how the October print comes. So I think the probability of a listless, slightly more prolonged consolidation is higher at this point of time rather than the usual V-shaped recovery back to the new highs.
Okay, all right. All right, Dhiraj, thanks a lot for joining in. Wishing you, your family, the entire team all the best in this Diwali season, and looking forward to chatting up with you in the time to come as well.
Sure. Thank you.